Welcome to Life Planning 101, brought to you by Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Good morning and welcome into Life Planning 101. I am Angela Robinson with Kennedy Financial Services here in the great town of Eastland, Texas, and excited to be with you this morning discussing the fact that we've got trouble, my friend, right here in River City for all those Music Man fans that are out there. I know my young days, my mom was always playing musicals in the household and it was fun, but you know, it really is the case. We live in interesting times, to say the least. Anyways, and I looked that up. I thought, maybe you live in interesting times. I wonder where that actually came from. Did you know that it was traditionally a Chinese curse? Some fine irony in that. I had to giggle a little bit. But we're really not talking anything about the pandemic today. Well, maybe we are, because we're going to talk about death. Because we're really going to talk about life insurance. And, the funny thing about life insurance is there is really 100% chance that you're going to die. And I think a lot of people buy life insurance on the certainty that is going to happen at some point. So things are going to pay off, right? And that's the question. Will your life insurance actually pay? So I came off of a study group last week, and I'll tell you what, I'm so blessed to be a part of this amazing study group of professionals that have been in this business way longer than I have personally. More about the time that Jim Kennedy, our founder of our firm, has been in the business, and so many of them. And then we were able to bring in several surgeons, so to speak. Well, one of those happens to be a surgeon in the life insurance industry, and they brought up some really important things that are happening in the industry and happening with your policies. And I think this is extremely important for anyone that owns life insurance to be aware of what's going on, because life insurance is kind of one of those things that you just buy, you set it, and you forget it, right? I mean, it's there. You got it. You feel comfortable if something happens to you. You bought it because you really love somebody and you want to make sure that they're taken care of after they're gone. And we don't manage it. And the reality is it's a financial instrument, and it should be looked at, and it should be managed just like your other financial instruments to the complexity that it is, which, by the way, it is a very, very, if not the most complex instrument that you have financially. A lot of people don't realize that. They think it's a contract, right? I just buy a life insurance policy, I pay the premium, and the company's going to promise to pay out that death benefit. Doesn't it work that way? Well, there's a saying, the big print giveth, and the little print taketh away. So is your premium really enough to guarantee that death benefit? And is it a guarantee at all? Some cases it is, some policies it is, but again, even with those, the big print giveth, and the little print taketh away. It's extremely important to know what you have and to manage what you have. And that's what we're going to be talking about on Life Planning 101 today. You're not going to want to miss it. Welcome back to Life Planning 101. Boy, do we have a mouthful of information today. And I'm going to tell you what, we're going to have an incredible newsletter this week. If you're not signed up for our newsletters, by the way, please do so. It's www.kennedy-financial.com. You can go online, sign up for our newsletter. You get something weekly. And this isn't some canned stuff that's all over the internet. This is real time, real deep thought process of what you need to be thinking about with your life, money. And we're in the business, we deal with success issues, right? People have success. How do I manage that success? Is Google enough anymore? There's so much information out there. What's really real? What do I really need to be paying attention to? And that's where we try to drive it home every single week. So make sure you get online. Again, www.kennedy financial.com and sign up for our weekly life lessons newsletter or our Life Planning 101 podcast, which airs on basically every kind of podcast network out there. So I definitely want to, encourage you to get yourself educated. And that's what we try to do on this show, is help you understand what's really important. And today, it's no different. Will your life insurance actually pay when you need it to pay? And it's a big question. So there was a headline a few years ago, and I'll never forget this. And this guy was turning 100 years old. And if he actually lived past 100, his death benefit wasn't going to be paying out. Yeah, really. He's been paying it to all these years and it wouldn't pay out because he lived too long. Yeah, interesting, right? This is the reality that we're living in. Contracts are that. They're contracts. There is no, well, we should do this because it's the right thing. It's a contract. And let me ask you, are companies in the business to do the right thing or to make money most of the time? Well, most of the time, it's the latter. And so, most people trust insurance companies as far as they can throw them. The irony with that is, though, is there's really never been a life insurance company that hasn't paid out what they owed contractually. If they did, think about it. Would anyone ever buy a life insurance policy again? It wouldn't happen, right? No one would really trust them. And even if a company starts to fail, you know what the industry does? So like other companies come along and they don't want that to be a bad rap. So historically, they buy up the contracts and they fulfill them to what the contract says. But do you think that if they're no longer in business, that they're going to go above and beyond and do anything special for that person? And absolutely not. It's just not what's going to happen. So it's extremely important that you understand the fine print in your contract. We made a statement before the break. We said the big print giveth, and the little print, it taketh away. And the reality is, and I don't know if you're a gambler, like to go to Vegas, but if you do, what do you think good odds are? Well, it really doesn't matter what your answer is, because there's 100% chance that you're going to die. I think that's pretty good odds. If I knew there was a 100% chance that I'd win at the craps table every time, I probably would never leave the craps table, right? So there's a 100% chance that you're going to die. Reality is, when will you die? And no one has that crystal ball. So hence why we buy life insurance to begin with, is to be able to take care of those people that we love, whether it be to financially support them, pay estate taxes, help make sure inheritance are equalized, make sure a business can stay afloat. There's lots of reasons that life insurance is a great, don't get me wrong, great solution to a problem. It can be expensive, and really, it shouldn't be cheap. Yeah, it shouldn't be cheap. You heard me say that, because you want to have something that's going to do what you think it's going to do when it's going to do it. And if you get something cheap, there's probably a lot more fine print that can take that thing away. Well, why am I bringing all this up? What is so important about these contractual dues? Well, this presentation, going back to the fact that I was just at this amazing study group, and this presentation was about the fact that and they used the best of times, worst of times as their title. It's one of the best of times to be an advisor in the life insurance industry, because we are adding more value than ever before. But it's the worst of times to be a life insurance company. Why? Why is it the worst of times to be a life insurance company? And no, the answer is not COVID. That was not the answer. In fact, that had little to nothing effect on actuarial assumptions, and we'll know more as time goes on, but so far so good. No, the answer is a 30+ year problem. For over 30 years, interest rates have been doing what? They've been going up, or they've been going down? Yep, that trend line is negative. It's been going down. Interest rates have been falling or stagnating. The trend line overall is negative to a very, very high degree. So why is that important? Well, if you have an insurance company and you want to make sure that a death benefit is out there, you have this group of people called actuaries that are behind the scenes, and They're looking at what life expectancy is on this block of people and what that premium needs to be paid and what we can do with that premium to guarantee that that death benefit is going to be there when that person passes away. And they do this on a mass thing. Well, how do they do that? How do they guarantee that? Well, they have to have what are called reserves. Every state is mandated by their insurance regulations, and they have to have a certain amount of reserves set aside to be able to pay those. And they're usually invested in very, very conservative instruments known as bonds. You hold a bond to maturity. What happens at maturity? You get your principal back. It's very boring, like watching paint dry. Bonds pay a yield along the way, right? They pay you because what a bond is you loaning money to someone else. So they're going to pay you interest in the meantime. Well, what do you think that those bond interest rates have done all these years that we've incurred negative interest rates, or a trend line that's negative? Yep, they've been going down as too. So some actuary that said that the average bond yield in our company's portfolio is going to be 5 point blah, blah, blah % today is pulling their hair out because that average is about 3.5%. And there's nothing they can do about it. And the reality is there really an end in sight with this? I think that's what nobody knows. And I think the life insurance companies were counting on it, 10 years ago. I mean, I remember when I came into the industry, this was a problem and it was talked about. And they said, well, interest rates only have one direction to go. That hasn't happened. The trend line has kept going negative, and that's not good. So where is it going to go from here? I mean, if we raise rates in the country, can we even afford our own debt in this country? That's a great question, right? So the point is, we don't know. And the point is that you need to be prepared not to know. So what does that mean for you? What does that mean for your life insurance? Is it in trouble? Is it going to do what you think it's going to do when it's supposed to do that thing you think it's going to do? And does it mean that you need it even at all? That's what we're going to answer when we come back on Life Planning 101. You're not going to want to miss it. Welcome back to Life Planning 101. We are talking life insurance, but not in the way that you might think we're talking about life insurance. We're not talking about the fact that you probably need life insurance to cover your debt, to take care of your family, to pay estate taxes, to equalize inheritance, to cover business expenses. No, we're talking about managing your life insurance policy. Why the heck would you need to do that? I mean, after all, you pay a premium, they contractually pay a death benefit if you die, right? Well, the big print giveth and the little print taketh away. And if you missed the first part of the show, I'd highly encourage you to log in www.kennedy-financial.com and sign up for our newsletter and read about this because this is important stuff. It is the worst of times in history to be a life insurance company. It is hurting. And because it is hurting, you could end up hurting if you aren't careful. Carriers are literally scrambling. Some carriers are increasing risk in their reserve requirements as much as they can, which is forcing, even a higher reserve requirement. I mean, if what you invest in the bond ratings drops down to junk bond status, you literally have to have 4 times as much reserve, which is costing them more cash. They may be increasing their internal costs of policies to be able to pay this, or, as much as they can contractually, because there is a lot of levers. And again, if you've got like an indexed UL, my gosh, there's so many levers in there. It's unbelievable. You better have somebody managing that on what they can lower and raise to be able to, suck money out of that policy so that they can just pay their bills, because not everything is guaranteed in the insurance world. if you didn't buy a guaranteed type of policy, then there is some level of risk that's on you. And even if you did buy a guaranteed type of policy, you may stand the risk that if you don't pay your premium within a certain amount of window, then it's null and void. So you better understand that fine print, and you better understand how to manage that policy and what's actually happening with that in this raising or in this lowering of interest rates world that we live in, and carriers in a bad position because they want to continue to pay out these death benefits, and they're going to find every lever they can to make sure to do things contractually, not get in trouble, but at the same time, they can only do what they can do. It's really not their fault. They didn't foresee that bond rates would still be down after 2 decades, 3 decades, and that's where we're at today. So I encourage you, go back, listen to the first part of the show. I was actually looking around. I try to lighten the mood, especially when we talk about life insurance. And there was this gentleman, him and his wife, their barn had burned down. And so the wife called the insurance company and she said, we had this barn, it was insured for $50,000 and I want my money. And the agent replied, whoa, wait a minute. Insurance doesn't quite work like that. So we have to ascertain the value of what was insured and we'll provide you with a new comparable worth. And she paused for just a long second. She said, well, I think I need to cancel that insurance policy on my husband. So I absolutely love that. I won't say that about my husband, right? Got the best husband in the world, just in case he's listening to the show. But in reality, nobody really likes to buy life insurance. Nobody likes to think about death, but it is important. And so, where does it fit in your plan? And I think it's even important to note where we're at today. In 1987, there were 2,337 carriers in the life insurance world. By the end of 2019, there were 761. And it hasn't stopped there. Just the first part of this year, Voya, Allstate, American Financial, Jackson National, Ohio, Principal, and AIG that I know of have all sold a part or all of their life insurance business. So what does this all mean for you? It means the companies are either folding, they're raising, or they're pushing, right? Meaning they're folding, closing doors, they're raising capital to try to answer this question, which really means that they're paying interest on that capital, right? Or they're spinning off those companies like we just said, and it's a big deal. You can't set and forget your life insurance policy and expect in 10, 20, 30 years that it'll be in the same condition that it is today. You need to have an x-ray of that policy and a holistic review now. Now, specifically, if you're insurable, so you can look at where you need to be in this market. Are you with a company that is planning to stay in that game, or is that business potentially going to get sold off? That could be a problem, because if a private equity firm owns a life insurance company, how much do you think they care about the policyholders? This is the reality that we're living in today. So it's extremely important that you know the carriers and you understand what the risks are. And it's saying it can happen with any carrier in reality. But there are carriers that want to be in the business. They're anteing up. They're raising capital. They're trying to do a good job. They see the problems. They've been making adjustments. They're aggressively out there trying to, put more money into their pockets. And I think that's something that you really have to look at. Second thing is a holistic review. Now, is it really the best time for your family to be buying life insurance? Do you need it? Is there another way to go about it? Is there another way to get the same protection? Maybe life insurance that you thought you needed, you really don't need. Maybe life insurance that you do need, but you didn't need a different type. And there's a much different way that you could approach that and take less risk doing it. So something that we've always perceived as a very safe asset, all of a sudden, there's a lot of risk. And it's really not all of a sudden. It's been coming down the pike for a long time, but if you've ignored it, it's an all of a sudden. So the reality is you have to review it. You can't set it and forget it. And wait. So you might be thinking, well, what if my family doesn't need it? Great. If they don't need it, let's look at what the market is. It's a seller's market. don't throw all that money away just canceling your policy. You need to be out there and at least looking into options on what you can be doing with that policy, because there's potential buyers. Even a non-permanent policy, a term that you're able to convert to a permanent policy, might be able to be sold, or a company-owned policy. We've seen it that might be able to be sold. And there is definitely a wrong way to do that and definitely a right way to do that. Because don't tell me that there aren't vampires all around every corner, right? There are. And that's in every part when it comes to the greenback. And we know that. So the reality is it's short and sweet. Life insurance ain't what it used to be. But it doesn't mean it's useless. And it doesn't mean it's not needed. It just needs to be managed. That's the important thing. The good news is, at the end of the day, we are here to help. We have literally dedicated resources, time, experts in this field for more than 40 years. We have taken interest in this. It's not our bread and butter of our business, but why do we take an interest? It's because we care about our clients and we want to make sure that they have the right things. So the reality is, you don't have any excuses. Don't let your family have a nasty surprise when they need what you planned for the most. My name is Angela Robinson with Kennedy Financial Services. God bless you. We are sending up so many prayers for so many families that are struggling with this new variant right now. And I know we got a great big God and a little bitty virus, and we pray for peace and we pray for health for each one of the families that we work with. And those of you that we don't know that are listeners on our show, you're included in those prayers as well. So God bless you. Have a great week, and join us next week on Life Planning 101 with Kennedy Financial Services.
Thank you for joining us for Life Planning 101, brought to you by Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. Advisory services offered through Smart Money Group LLC, a registered investment advisor. Securities offered through Calton & Associates Incorporated, member FINRA SIPC, Kennedy Financial Services Incorporated, Calton & Associates Incorporated, and Smart Money Group LLC are separate entities.